The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technician Hour. The VIX is up 52 cents at 22.49. The Dow is down 164. The S&P is down 20. The QQQ is down 2.9. We're looking at something very interesting here. So what I wanted to do is to discuss a few things, just one at a time. We'll do these things in sequence. So if the volatility index, and the Dow is really not, down 160, even 200 points, it's just not a big deal at this particular stage, down 20. We've seen that in minutes. We've seen moves like that. The fact that the volatility index for the first time is starting to acknowledge by raising itself above the 18.95 level that was hit on the 2nd of December is really important, because what it's saying is that in the context of what we're looking at right now, yes, if you look at yesterday's low of 20, was it 20.01? 20.01 yesterday, and the high was 24.30, and then it closed much lower, and that's basically a Chapman wave inverted Roman candle. This is a green candle at lows. Let me show you something else in the context of the Chapman wave Roman candle. This here, I typed it in for my subscribers this morning here. You can see it. This Roman candle, I'll expand this and let's just use this. This is what I send out every day. It has the Dow daily on the left side with just some moving averages plus the Chapman wave notation. 34,612 was a peak E high on the 13th of December. We've gone down to 32.57, so there's a 2,000 point decline, a quick one. Took out a couple of weeks worth of upside move. But here, the middle one has the same moving averages, plus it has the MACD, the moving average convergence divergence, which is still negative, but I'm really interested in the way the histogram is starting to improve. That means the green 9-period differential is starting to get closer to the slower moving average, the 26-period exponential moving average. That's a good sign. The stochastic has kind of rallied. It's now above 20%. It's at 22% right there. It was at 18% yesterday. On balance, volume is very poor. The 9-period exponential, the 200-period moving average right there, that's been fantastic support for over the last 6 sessions. It's been hit 4 times. More importantly, what we're looking at is in the 120-minute chart, you start to see some improvement in the technicals. The Chapman wave automated support line of 32,588 was just breached momentarily at 32,573, and it's now above that. I see a number of buying signs amidst the overall weakness. Now, so let me go back to the Chapman wave Roman candle. So in this particular instance here, I'll expand this. This is the daily chart. I want you to be able to see this clearly. You see when the price opens on the downside from a high, makes just a fractional wick at the top, plummets to a low, and then closes halfway to 2/3 above the low. That I call a Roman candle. Why? Because I'll do this. This is kind of a lesson right now. So before we get to anything else, we've got time. There's no rush. There's nothing to do. We're in just in a sideways trading band right now. That's what I'm calling it. INDU. There are a lot of things going on, which I'll discuss in a moment. But look at this. This candle, exactly 11 months ago. This Chapman wave Roman candle, I've even typed it in there, where the wick, it's just a fractional wick, and then the price plummets down. You don't even have to know what it is. And then it closes halfway to 2/3 above, says that if the very next candle, I like it to be the very next candle. It can be 2 candles later, but I prefer if it's the very next candle. If the very next candle trades in a smaller time frame halfway into this long lower wick, the shadow, there's a really good chance that there's a very quick move down to the low of that Roman candle. And then you have to deal with that, because then there should be a balance attempt, and if there isn't, that's negative. Here it made a second one, not 100% a Roman candle, but it had almost all the ingredients except the wick at the top. It's just a tad too long. I like the wick to be just like a Roman candle, just like the little wick at the top. Whoosh, right? That's what happens. That's at the top. But every once in a while, you get the reverse, and it's at lows. You get a candle that's red with the wick, and it has a different implication. And it says that if halfway into the wick, here's the S&P again, if it can hold in a short time frame, if it touches it, holds, and then starts to move up, that means now you can start to look at the potential for prices to move 2 out of 3 sessions. Doesn't matter. Now I've gone from a daily to the monthly. You see what happened with the wick at the top in January? That was the foretelling of a really chance of a good pullback, or more than that, right? We had 50% pullback. 30-something percent. It's 50. If you go from the bottom of 2191 in March of 2020 to the top in January of 4818, we came back to 3,500. So you can see that there's that big pullback. But what I'm looking at here is that there's a chance now that over the coming 2 sessions, you only have really 2 sessions in which to do it. I don't know how we can do it today, but then you've got Tuesday. Is today, well, maybe in this particular very, very light volume season, I could go 3 days. But it's not the point. The point is there needs to be 2 out of 3 bar closes above the wick, above the high of this whole Roman candle. In this case, it's 3853.26. We're at 3815. I mean, to do that kind of a rally, was about a 500 or 600 point rally in the Dow, to have the S&P do that, that's a big ask. The day's young. We haven't even done 1 hour yet. We did go into that level, and that's the Roman candle. Now let me put that back into the context here of the inverted candle that we were looking at in the VIX index, and that has almost the same connotation. That if at any point in the next 2 to 3 sessions, I prefer it's the very next one, but light volume, light everything at a holiday season. If there is a VIX that on a 120-minute bar for 2 bars closes above the halfway point, in this case I'm calling it 23, just to round it out. If the VIX at any point holds in the 23s, there's a really good chance that it's going to go to the top, towards, it doesn't have to go exactly there, but towards the top of that range, the 24 level, and that will really hurt the market. So you've got these 2 aspects. Could they negate one another in this environment? That is a possibility, because you can see moves are contained very quickly. Let me show you the E-mini right now. The E-mini, look at the speed of this E-mini. Pops up, and this is a 1 minute chart. Pops up, and they give the whole thing back within a few minutes. Then pops up again, and now it's a little more concerted, because now it's got not a single leg A up. This has actually gone to a leg B in the rectangle formation. Could be stuck, rectangle. Oh, look at the rectangle formation in the 10-minute chart. Unbelievable. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Gosh, I was going to do this and I thought, it's just a quiet day. Let's get to it. There's a bunch of stocks I had already written down here. I wanted to show the gap in Nike, what it means. I wanted to look at Amazon. I wanted to look at DBA, that's DB Agricultural Fund, which real long started to act really well. Sugar's really taking off. I wanted to show the ZS. ZS is Z scale. And flowers. But in the meantime, look what happened. The bar symmetry, I spent a lot of time on that in my all-day my trading webinar, how this works. If you can identify the plumb line, it means that you've got bar symmetry. And bar symmetry implies that there should be the same number of bars on the left side going from a high to a low as the bars on the right side. Well, lo and behold, I had to do this in the break. It hadn't got there even close. It was a 38.43 in the E-mini. But this is what I wanted to do earlier on. I'd already drawn in the rectangle. I'd drawn in the cup formation. I wanted to explain because I had a question from a couple of people, webinar people, that said, can you just show us a trade that you've done or something that shows how you would have got into a position and the machination? So let me just show you here. In this particular instance, from that high that was made in the 1 minute chart at 934 in the E-mini, the S&P E-mini March futures at 3854.75, it comes sharply down, bounces for a peak A. That A becomes a peak A minus because it comes down and makes a lower low, and that low stalls right at 3820. Was it 3821.25? And then what happens is it has a big spike, A, and then it comes down. And I drawn in the rectangle to say this is the containment area, but I didn't have a chance to do it because I was busy on the show. I wanted to go to the high on the left and to say that the midpoint here, if you're looking at this, you can see with the action here, on a visual basis, it looks as if there was a rally from that left side to the right side. It could be an equal amount of time that takes you there. That's number one. So you use this as your plumb line, and then I have a particular candle or a particular visual that I go to because there has to be some mathematical way of doing it. You can't make up every single time, make up something to say, oh, this time I do that and that time I do this. No, there's a particular methodology. And that methodology takes you to the Chapman wave inside wedge, target, resistance line. Usually I make a dash, I'll make a dash right here. And that target resistance line, if you can't tell exactly, it says to the end of this bar, that is matched on the right side as green. You could just use a single line. You can make the one straight line, the other a dash line. I've got the tools here in TradeStation, so I use it. And see where the resistance comes in, and does it coincide exactly to the point? Well, lo and behold, look what happens. There you go, peak A, fails, but holds the left side low. So the next peak is an A again. It's a gray A, then a gray B because it's still underneath that. But look how strongly, all of a sudden, the 914 crosses positive. The MACD goes positive. It has been strongly positive. It held beautifully on the dip. And lo and behold, you've got the stochastic, which is moving towards the 80% level, which we need. And the on-balance volume is moving. So that says there's a real good chance that the cup formation within the big rectangle is going to go towards that high in this time frame. Well, lo and behold, look, there it is. This is the exact bar. I couldn't make this up. These are the rules in the Chapman wave methodology. And lo and behold, it goes to that peak D. What's your objective in the Chapman wave? To go from a buy signal, upgraded to a buy mode, which says you should go to at least a D. Well, it's got to the D, and now it's stalling. I could go. I don't want to waste time. There's a whole thing. I drew this in. I did not trade this. I was really trying to. I had 8 or 9 different stocks that I wanted to put in. A lot of them were, and this is what I'm going to be doing for subscribers, a lot more, because I've done a lot of work on this. I don't know if it'll always work out, but in this environment, I don't want to have big cap stocks that can pull back big points. I'm not talking about percentage point. I'm talking about points. I'd rather be trading really good looking. And let me tell you, the microbiotech is on fire. They are just fabulous. I mean, when I say fabulous, I mean absolutely startlingly good. So within that context, there are a lot that have already moved sharply. I want to pull back to be able to get in, or we might have a couple of screamers where you get them at a high and you have to just either grab them right there and move your stops up. As you close your eyes, you get it in, you got your stop in, and then as it runs, you move your stop up, but you can also take something off. It's the only way you can do these things when they're flying. But what I did is, the rectangle formation I've spoken about. I've spent hours and hours in my shows talking about the rectangle. Look at this, a long, narrow rectangle formation, especially if it finally goes to a D or E or an F above the rectangle briefly and comes back in. Watch out if it takes out halfway into the long rectangle formation, because it can go a lot lower. And in the meantime, it can last a lot longer than your patience. So at the bottoms, you got to try to get in, and the tops, you got to get out. And don't think it's going to break to the upside until it really does. And when it breaks to the downside, be careful. Lo and behold, this one broke it to the downside, the 10-minute E-mini at 8:10 on the 22nd. Today's the 23rd, so that was yesterday. And then it just kept going down, down, down. Look at the 9 and 14 moving averages. When it closed negative at about 30, I think it was 39.26 or something like that. It didn't cross positive until right there at 3 in the morning. That was 3 o'clock yesterday. 3 o'clock, there was that big move up. I was out of the office, unfortunately. I missed that whole thing. Fabulous move to the upside. But then look what happened. It stalled, and it went into a long rectangle, just squeezed a little bit higher because the 9 was still very positive. And then it went into a huge sideways move. I mean, we're talking about a 12-point range in the E-mini from 9 o'clock last night all the way through to the break when the announcement was that the CPE number was, the market did not like that immediately. It just pulled back really sharply, bounced quickly, and then came down. So isn't this? And then what I had drawn is I chose this as there's a particular candle that I chose. I try to be as consistent as possible. This looked to me at this particular point like I said, I'm just going to choose this as a as a potential midpoint if anything goes wrong. And then I'm also going to take this particular high and go to the lows and see where this trend line goes. I did nothing. I was just notating, and I was trying to find stocks for my subscribers. And lo and behold, look at this. Left side, right side, price time match. It went there. There's the line. It stopped right there. It was three 10-minute bars early, and it went down. I did not trade this. I was just watching it, and I did say to subscribers, we wanted to buy a very aggressive position, a small aggressive position in something, a kind of a generic thing, if the market responded positively to the Fed, and it didn't. It went down, so we did not do anything there. At this particular point, I would be even inclined to get into that position, but it wasn't an official position, and so we stepped aside. So here we are moving higher, very gently. I like that. That's that Roman candle. That's it. So far, it's succeeding.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back and we're looking at gold now up 11. So it's stuck in this range, and the fact that it's stuck and the fact that the GDX, oops, I typed in the wrong place. The GDX, right there, GDX is also holding on the 200-period moving average, and silver, so the GDX is up 7 cents at 28.84, holding very nicely, but we've got a peak G top, and if you look at the vertical line, in fact, Tom O'Brien will be doing the show straight after me coming up, and if you look at and he always looks at volume in this vertical sense. I look at on-balance volume, I look at MACD, stochastic, and relative strength, and you can see they were much weaker on this right side test around about the 13th of December with a higher high. The fact that it's pulled back, it's had 1, 2, 3, 4, 5, 7, 8, 9 sessions and it's still only from the high that was made at 30.40 something, was it? Let me just check. 30.46, you have 30.46. That says 30.46 right there. That says that it is in a really a holding position, because this is a peak A in the Chapman methodology. I don't want to show it right now. I want to go through a lot of other things. This is a gray A, and it says, let me make it gray, and that just says it's a bounce at this particular point. There's a particular pattern that I talk about, the lowercase h, where it comes straight down, and then it arches over at a peak A or a B, and if it takes out the left side low, that's really serious. At this particular point, it's in the process of showing that it's either got strength by holding the 200-period moving average and being above the 9, which is above the 14. And that's going to be important going into Wednesday of next week. We've got to give it a couple of days. If it gets to the 29.60 area, it's at 28.91 right now. That's really good. It says, gosh, you're in a kind of a large, not a narrow, but a large rectangle formation, and you're just going sideways, building strength to maybe move up, unless at any point it closes under 27. And the SLV, that's the silver ETF. This is the iShares Silver Trust, holding after a peak E, holding really well, gone to the left side, right side price time match within 2 weeks. Yep, 2 weeks early. This is the last week, so it's within 2 weeks. 21.94 was the left side high that I chose. It isn't a beautiful cup formation that I always talk about. The real cup formation says that it needs to get to 24.80, 24.90, I think. Yeah, 24.90. That was made the week of the 11th of March. And so far, this is really good action. The MACD in the weekly is strong. Stochastic is flat at 92%. That is really important. And even more so, the on-balance volume is moving very nicely. And you've got this Chapman wave inside track repellent zone that is coming up to in the monthly chart. Let me just get this done. Right there. Go click once. Put it in there. Make that pink. Click once there. Makes it green. You don't need all these colors. I do this because it's for show. I need to show you what I'm doing. It's just easier to see. I mean, 2 lines and make 1 dash. You don't need anything. You just need to visually see it. And it says at any point in the monthly chart for 1 month out of 2, just that's all you need is 1 month out of 2 months. It goes to a high and then holds that high and then holds, doesn't have to be a high. It goes to the 2380, even 2350 level to 2360 for 1 month, and it holds 2180 support. That's this breakdown right here, where it's going to be breaking out of. That's going to be really positive. You've really changed the trend, and that MACD in the monthly chart will start to improve to maybe even cross positive. I don't know yet, but silver is really very good. High-grade copper, high-grade copper. I don't know why it goes to that. There's something in this platform, the Microsoft, I guess, platform, that if I hit something at the bottom here, it goes to the background. All right, well, it doesn't matter. High-grade copper is holding in the higher level of this big arch formation that came off the cup formation. It's just stuck in a trading range. And what is it stuck at? I've spent, I don't know how many shows. The 200-period moving average, you see this orange line at 3.82, yes. Look how important it's been. It's been like a magnet. It can't break away from it until it holds sharply above or below. So this is a good magnet to say, well, copper's steady. Let's go to the TLT. Had a question about that. TLT versus the TBT. Yep, that is a peak G. I'm going to change that right now. I meant to do that the other day. It was very obvious that that was some kind of at least a short-term sell signal. I'll have to do some work at the end of the day to see whether or not we've got a sell mode. If we've got a sell mode in the TLT, the TBT becomes a very viable way of looking at interest rates and trying to play. If you have bonds in your portfolio, but you're trying to protect them, let's just say you have munis. If you have the munis and those munis are becoming a little bit vulnerable, then you've got to protect yourself. And the way to do it is maybe to have something moving in the direction of the yields, which is the TBT, which is at the 50-period moving average, 30.55. The way the MACD, see the way the MACD is quite nicely higher in the daily chart, but you see the stochastic, the power, the torque of the stochastic if the on-balance volume, the blue line, was really moving up with it, I'd say you've almost got a Chapman wave squash, which says you should get to a peak C very quickly. And then the MACD, as the stochastic starts to pull back a little bit, the MACD has to take over. But all I can say is just on a purely visual basis, the weekly chart's still very ugly. It actually has, this is a Friday close coming up in another few hours. That's at the 9-period exponential moving average in the weekly, and the 9 is just crossed negative. So to negate the S that's right there, which is sell, this is just the 9 over the 14, under or over, goes green if it's over and pink if it's under. I have to have a confirmation. So at this particular point, the yields look like they want to go higher. The pattern will change if any time next week, maybe Wednesday or even Thursday, you're starting to see the TBT it's at 30.59. If it gets to the 31, if it fills the gap of 31.11 that was made on the 30th, then the high of that candle, 31.94, becomes activated. So all I can say is that all the technicals here are improving tremendously in the daily. It's in a buy signal, not yet. Technically, I should say it's in a buy mode. The stochastic's at 81%, but it's only just got there. And the L, you can see, it's just in the daily chart. It's just the day's young, but it's crossed the L in the 9 over the 14. I'm just going to say it's in a buy signal, very close to a buy mode, which says it should get to at least a D. So yields look like they want to continue higher. A couple of things that I wanted to look at just as we, natural gas. Natural gas is holding. It made a low today of 4.825. The candle that we saw yesterday was just a horrible. All the candles have been terrible since that 6.9 high, and now it's in the continuous contract at 5.184. What I wanted to point out was there are a number of trend lines that I could draw in the weekly chart, and none of them are very convincing. So for the natural gas in this time of the year with the cold, the temperature is plummeting. Even in Florida, I believe it's plummeting. We're not too bad today. It's been horrible wind and the rain, but tomorrow it freezes. So we got to be careful. Meantime, back in the range, it's a mystery to me why, in the context of what I would be thinking, natural gas is doing so poorly. But you remember, we looked at this chart in greater detail, and we said, wait a minute, last year it kept going down and down and down and down. So there is no precedent. All I can say, natural gas looks terrible. Okay, we come back. I'm going to be looking at Nike. I'll put it up right now. Do a little discussion about Nike and gaps. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3x bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So if you were just following the techniques that I talk about, and I talk about this very often, look how this one particular technique could have kept you in any trade when it went positive right there, around about 10:06 this morning Eastern time, right up until now. It's still, so that's going from the 30-ish area, 38.28, and here we are at 38.63, and it's still green. I just wanted to show you that these are techniques that I'm going to do a little bit more of to demonstrate over the, I always do this, but I'll do it in a little bit more timely manner as I do my shows next week. More importantly, going to Nike. So I have a rule of thumb. And it's interesting because I think that David White in his own methodology, also he calls it the 3-day rule. I always thought that, I talked about it as 3 sessions as well. And one of the things is this: on the downside, when there's a huge gap to the downside, if within 3 sessions, the low of the day of the gap is not taken out, but there's an inside day, that's just one part of the puzzle, and it's a good sign. If, in fact, it takes out the low and closes under that low, the gap down low, that's really poor action, and it means that the actual gap itself is going to take a long time, usually takes a long time to fill. If, in fact, the day after the gap, there is a rally that takes you above the gap high, that says that's a good sign, because there are buyers. There were some people that never got a chance to short. It was so quick that they're waiting for a rally now because they want a rally, because they want to short. And that says, okay, you've got upside potential, but sometimes those people don't get a chance to short. So that 3-day rule is very specific, but it's the opposite on the way up. Now, I've spent a lot of time on this. I talk about it every time it happens, and we discuss it, and I say, if the following session, the low of the gap hasn't been taken out, remember, this is the inverse, like the mirror image of what we were talking about, the price must get back in, and the second bar mustn't even look at the low of the gap low, day of the gap low. In this case, in Nike's instance, there was news, earnings, etc. That night was up about 12. The next day, it just 3 days ago gapped up very well, and then it did pull back, but it held. It held okay. Certainly, it held underneath the high of the 13th, which was under 1645. But it's okay. But then yesterday, especially with that horrible action, Nike was holding like a trooper. It held as it pulled back, and then it closed at 116.82. That makes today an absolutely critical day. Why? Because now there's a filtering of all the news, what's good, what's bad, what's in, what's out, covering shorts, buying new longs. Is this where you buy? Is this where you hold? What? So this confusion says the fact that it's up 19 cents, 21 cents right now at 116.94, that there's an overall, I don't like to put the circle in because in my work, circles mean something else, but I'm just going to put it in because I want to show you where we focused. And it says at this particular point, there's enough energy that if next week there's just a bias to the upside of the market with all the negativity. I mean, I usually, when this is the equivalent of a holiday like July the 4th, I always say, well, the Friday before or before the weekend, the captains are all in the Hamptons or wherever it is, and the chefs or the cooks or the waiters are doing the trading, and they are told, whatever the market does, you got to do that. Do not lose money, right? So that's a holiday weekend. Next weekend, so I don't know, maybe they go on skiing. Okay, they go on skiing, and instead of the boat, you've got whatever it is. Their lackeys are doing the trading. And in this particular case, Nike is separate from all of that. It's in the assessment stage. And if you're looking at the monthly chart, the stochastic's at 84% and holding steady. The on-balance volume's really good. It's testing the overbought level from a couple of weeks ago, but it's good. MACD's expanding still. Look at the histogram. This is a fantastic candle. There is nothing wrong in the candle. I don't care about future earnings or anything. I'm saying right now, there's nothing wrong. Look at the monthly chart. Bumps up against the 14-period moving average for the first time in months, 6 months. And if it closes above that in December, that's going to be the first time it's closed above this 9-period moving average. You can even say since January, and the high was back in November of last year, just under 180. So I like what's going on here. So the question is, if I can find the question, it was a really good question. I'll try to find it right here. Whoops. All right, it's just over there. I got it here. Long Nikkei calls on this premise, although 117.72 may cap it. Oh, okay. So Diamond calls my thoughts. Oh, two very important questions came up. Since you are looking at the longer term in Nike, I would suggest that the bias at this particular point. Oh, you want the short-term? No, short-term Nike option opinion. Okay, there's a level consolidation on the 5 or 10-minute chart. So, nothing here doesn't apply to what I've been talking about. Let's go to the 5-minute or 10-minute chart. Let's go. Here we go. Oh, look at that big candle down. Made a peak E in the 1-minute chart, and look at this, cross negative. Isn't that interesting, huh? So let's go to Nike NKE. NKE. We've got. This doesn't. It's not NK. I didn't actually tag that. Here we go. Oh no! The worst thing I could do. Oh, I'm stuck now with all my charts. Why did you do that? Oh, okay. I'll tell you what I'll do. I have to go here. Oh, what a damn you! I've got the mouse is so quick on some of the in the action that sometimes. Please, let it be. Oh, come on! Don't take your time. Now this is not the time for it. Okay. And I have to go 10-minute chart. This is good. Oh. I don't know. I'm going to get this back. I'm just going to cancel. Let me cancel and let me hope and pray. I don't know if that's going to work right now, that I can do a change here. So we've got the Nike chart right there. Let me do this. Oh, you wanted the 10-minute chart. I'm just going to change this. Let's go to the next thing I was going to talk about was the DBA. Let's go there. Oh, I can't. Everything's messed up. Nike. Go. Oh. No. All right, I have to make a change. All right, what a thing to happen right now. It happens, of course. I can do it here. Okay. I'm going to have to spend the rest of the day probably reorganizing everything. Here's your Nike chart. There shouldn't be any change in this. Let's hope it didn't affect this chart right now. Nike NKE, please. I can't do it during the break. There it is. Nike chart. Yes, this high-level consolidation is good, but you remember the rule of thumb with the rectangle or long rectangle formation, you've got to be really careful. Look at this. Ay. I'll be back. I'll do an analysis on this, and then, of course, I wanted to give an overview, and I can't do that.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So anyway, Dan's got out of his position on the Nike. It was just a real short-term trade. But the whole thing with it, I'll do that again on Tuesday when we're back. I'm just going to mention right now, Tom O'Brien's going to do the show coming up, the 11 o'clock hour. I'll do the news, and then Tom's coming in. They're going to wrap things up because we do have a couple of people that are just unable to be here. So Tom will do the 11 to 12 o'clock Eastern Time show coming up in another few minutes. I just want to do three things. Number one is I can't do much. I have to reorganize my charts. Something happened over there. So the question came in. I have options on the diamonds. They must have been fantastically up 3 days ago, and then yesterday they got knocked down. I would just suggest that you have to extricate yourself if it's today. If the options expire today, it's going to be very light volume. I can still see another bounce to the upside, but even if they must have been up huge, but now they are down because of yesterday, I'm sure. I would get that cash. You're going to have in January. You're going to have plenty of time with the options. We're going to be zigging, zagging a lot. So what I would do is, as the market's moving up, I just extricate yourself a little bit. And then for the end of the day, there's a chance that we have a spike into the close. And if there is a spike into the close, that's what you wanted to see. And I would it doesn't matter what the price is. Forget the price. You've got to be looking at the chart as it's moving up, and then you can keep a few to say, well, maybe it will save me because there's a huge move at the close. I do not want to see the Dow, which is up 61 right now, go down minus 30 from this point. It has to be higher highs, and that's what you want to see. That's number one. Number two is we'll talk about Cathie Wood next week. I don't understand how she's still in that position. Anybody else, with that kind of record, something's going on. I just don't understand it. I mean, she's done everything wrong. 5-year limit, I don't know what she's talking about. And the other thing is, we were long Flowers a little while ago, 1-800-Flowers. We got out of it. Now Flowers is doing exactly what we wanted. Sometimes that happens. Have a wonderful Christmas, everyone. Have a great long weekend. We'll see you on Tuesday. Check out my daily newsletter and the whole